It seems that we are flying at a nice altitude with the S&P 500 near record-breaking 5,000 level, and as earnings and job numbers coast. But from a 30,000-foot view, what's really happening here? We're going to break it all down for you right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm Anthony Pastore. Very happy to be here with my colleague from the Chief Investment Officer, David Lefkowitz, for an in-depth discussion on what's going on in equities right now, which, of course, is the hottest topic since last year, the Mag 7, the technology run we're seeing. So, David, I guess the question here that you're probably getting, not just from me here, but everybody that you talk to, is the S&P is nearing or hitting all-time highs. We're above that 5,000 level recently. So there's a lot of mega-cap growth companies that are reporting really strong numbers throughout earnings season. We're nearly done with reporting as of sitting here. Is there still upside here is the question, considering the growth we saw last year and what we're already seeing into the first quarter of this year?
Yeah, so I think the answer to that question, let me break down sort of what's been driving the upside that we're seeing, right? I think there's been four factors. Economic growth has been better than almost anybody thought it would be. At the same time, inflation has improved to an extent that most people was better. It's better than most people had been thinking. As a result, the Fed is now in a position where they can start cutting rates. And on top of that, we're seeing this incredible investment boom in artificial intelligence. So all those factors together, it's a pretty favorable backdrop for markets. And that's really what's been driving the markets, really over the last year plus, I would say at this point.
Oh, go ahead. Sorry, David. Yeah, I mean, because I was going to just take, so if you can expand a little bit on the tech performance. I mean, AI infrastructure, there's still spending going on there.
Yeah, there's still. So let me just, in terms of, yes, but I want to just figure out, get back to just, the outlook for the market overall. Yeah. I think that the challenge is that a lot of this, I think, is well reflected in market pricing at this point, right? We're trading at about 20 times forward PE on the S&P 500. We think that's reasonable and fair in the context of this good environment, but it's hard to see a lot of upside in terms of valuation. The other thing I would also just highlight is that some of the things that we look at, like sentiment positioning, they're getting a bit elevated. So usually when that's happened in the past, that signals more of a choppier environment for markets going forward. So our main message is that we think there's a bit more upside, but we also think there's probably going to be better entry points. So our main message: stay invested, but if you want to add to positions, wait for a better entry point.
Okay. So, and didn't mean to jump on you there, David, only because, when you talk about AI, everybody's ears perk up. It's the hottest story.
Right.
And we are seeing continued spending on infrastructure there. There's still expectations that AI will continue to grow. But we saw with what everybody calls the Magnificent Seven, the top 7 companies in the S&P, it was a lot of it driven by AI. Is that still going to be the case as we look down the road?
Yeah. So look, I think there's been a really big change in the dynamics of the market itself, of the S&P 500. We're in a situation now where the top 10 companies, which obviously includes all the Magnificent Seven, they account for a third of the index, right? If you look historically, usually the top 10 companies have usually accounted for about 20-25% of the index. And what's also different right now is that those top 10 companies, there's much less diversity among the top 10 than there had been historically. A lot of them are these mega cap growth companies that we're talking about, these Mag 7s. So it's not surprising that they're driving the returns in the market. And I think we've got a chart up here showing that, last year they accounted for a very large portion of the returns in the marketplace. If we look at what's happening this year, that's still somewhat the case, but we're seeing a little bit more diversity within the Mag 7. A couple of them are actually down on a year-to-date basis. NVIDIA is up 50% just in the first part of the year, which is kind of staggering to think about. And that's also having an outsized impact on the market return. So look, by definition, these large companies are going to continue to have an impact on the market because they're so large. The other thing I would say, though, is that this, from a portfolio construction standpoint, this means that the S&P is probably a little bit less diversified than it has been historically. And I think you need to think about that as you think about portfolio construction and the outsized impact that these companies are going to continue to have on market performance.
Right. You made a really good point that just, a number of years ago, you could look at, there were banks in there were energy companies in the top 10. So as you said, much more diversified top 10 S&P 500 versus this very tech-heavy weighted. So given everything in that picture that you described, David, what are you expecting now? Because it looks like the earnings expectations for the rest of the year have shifted a little bit given performance that we've seen. What are you expecting now, given what we know?
Yeah, so in terms of earnings performance, market performance?
Exactly.
Okay. So yeah, I would say, look, fourth quarter earnings season is, we're in the later stages of it. The numbers have been good. I mean, we went into earnings season thinking we were going to see 3 to 4%, 3 to 5%, I think was the number we put out there. It's coming in 7 to 8.
7% at least.
Yeah, so it's been very good. The forward guidance has been pretty encouraging. So it's been a better than expected earnings season, certainly relative to what we expected. And I think that's also been a key driver for why the market's gotten off to a good start this year.
Yeah, and given that, as we're wrapping up, when you're talking to investors or our advisors at UBS, what are you recommending to them as for positioning within the equities space? Because of, it feels like we're very top heavy, but it seems like there's still maybe more room to grow here.
Yeah, so one of the areas that we just think is kind of neglected are small caps, right? We everyone wants to talk about Mag 7, but at the same time, small caps, they're not getting much love, and that's reflected in their valuations. They're trading at less than 14 times. That's compared to the large cap universe trading at 20 times. That valuation spread is very wide. In fact, you have to go back to the peak of the dot-com bubble to see small caps trading at such a large discount to large caps. And we think there's some catalysts to unlock some of that value that we see. Easier financing conditions are beginning to play out. That's really important for small companies because they are more reliant on bank financing and what the Fed is doing. So the Fed potentially pivoting, the fact that the high yield markets look like they're open now. More companies are raising high yield debt than we've seen in the last couple of years. We also think we're going to see a pickup in earnings growth that's going to broaden out. So earnings last year were down 10% or so for small caps. We think that's going to flip into double-digit positive, probably could outpace large caps. So I think there's a lot of interesting dynamics in a pretty cheap sector that's been, frankly, unloved. And then, within sectors, within the large cap space, we do have a preference for tech. We still like it. I would just say, look, it's been a nice run in the last several weeks. Wouldn't be surprised if there's a dip and a better entry point. And we still want to be a little bit cautious on some of the more defensive areas like utilities and real estate.
Terrific. David, thank you very much. Quick rundown, but I know this is a very, very popular topic, and obviously you're getting a lot of questions here. So thanks for joining us in the studio. Good to see you.
Yeah, my pleasure, Anthony.
Great.
Thanks.
And for more from David and the rest of the Chief Investment Office, visit our Insights website at ubs.com/views. Plus, you can follow UBS on social media, all the major channels there, Instagram, LinkedIn, Facebook, Twitter, you name it. Plus, you can follow the studio at UBS Trending on Instagram specifically. And if you have any questions about your portfolio, make sure you're talking with your financial advisor. Until next time, I'm Anthony Pastore. Have a great day, everybody. And remember to keep your eyes on what's trending. We'll see you soon.